So we're going to be talking today about one of the most exciting topics in crypto, one that has definitely gathered a lot of buzz in the past few months, and it's the intersection between AI and crypto. This time around, we're diving specifically at the intersection of AI and DeFi, which is an area we have a lot of expertise on. So we'll start covering, more broadly as usual, getting everyone up to speed on like agentic frameworks, what they are and what are like the top players within this industry. Then we'll dive a bit deeper into the largest agentic framework, at least by market cap, which is Virtuals. So we launch an ecosystem dashboard there where we'll show us some of the key metrics and analyze what might come next for them. Then we'll talk more about this DFAI or DeFi, not sure how you pronounce that, but it's a new buzzword being thrown around to describe the intersection of DeFi and AI agents. And lastly, some more rhetorical questions and insights on the outlook for the space. So before we get started, quick update about what we've been building at Into the Block for you guys. So as I mentioned, we launched a Virtuals ecosystem dashboard. We'll be showing some of these metrics throughout the presentation, but it's a comprehensive dashboard with over 15 indicators or so. So make sure to check it out if you haven't yet. That's on our analytics product. Upcoming, we have a Flare DeFi ecosystem dashboard, which you should be able to have a look at in the next few days. This one will be free for access in partnership with the Flare team. Then, as you guys know, we have a very large DeFi presence, and we've been expanding with the LSTs. So we have a large coverage of Ethereum eigenlayer LSTs. Now we've been working with Babylon, so we launched the first one, Pump BTC, which is one of the larger LSTs there. You can track economic risks for them, like the price. Unfortunately, it's been depegged recently, DEX liquidity, and a lot more. We're also very excited to partner with Euler, a modular lending protocol on their V2. So we launched a dashboard free to access on our risk radar platform to keep track of the risks of liquidation, bad debt, and overall growth of the platform, which has been already reaching 100 million plus in TVL within a couple of months. And last update, we're soon to be launching Term, which is another lending protocol, but more focused on fixed rates and fixed term, as the name implies. Also very exciting protocol for you guys to keep a lookout of. All right, so without further ado, let's dive into the main topic, agentic frameworks. So AI overall, of course, has grown quite a bit since 2010s or so, like early 2010, when a lot of the papers really started gathering steam around transformers and the testing of using AI for not just identifying things like what music you like, but rather creating actions, creating content, for example, based on like a very large amount of data. So that led us to the generative AI, space where we are at right now, where we're not just improving like decisions, we're actually creating things from scratch just through language input. This was powered by LLMs, and of course, ChatGPT is the typical example of this, with being the largest company to reach 100 million users within just a few months. And NVIDIA benefiting as a result from this trend, as a lot of their GPUs have been, almost a monopoly for powering these chips that the LLMs require. So the next phase, at least as Jensen Huang touts it, is agentic AI. So not just creating items, but actually executing tasks based on that. So that's, I think, how I would make the main distinction between like the current phase of AI, which is, you can create like an analysis. It's actually executing tasks based on objectives that people preset. So the idea is you can have one or multiple agents where you predefine a set of objectives that you want to get to, and they have a certain bandwidth of flexibility that they can operate on based on parameters that you can pre-specify. And using their natural language processing, they can identify what path aligns with your end goals. So there is, of course, a lot of trust in building on top of this underlying technology. And the idea is this will get us faster to goals that we want to accomplish, whether it's saving time, saving costs, or just creating more output. And for that, of course, we need to connect to a lot of data and external outputs. So you can think of this like agents connecting to APIs, tracking, the data that you consume, or, bank accounts in some cases, or even further, as we'll talk into, our wallets where you can execute transactions based on permissions that are preemptively agreed upon. Naturally, we have seen a lot of hype with AI agents, uh, like AI in general, but agents has been the latest generation of this hype. So you can see here at Google Trends, data over time very quickly in 2024. It's accelerated, particularly in Q4. And not surprisingly, this is also very similar to what a lot of the AI tokens in crypto look like. Which drives us, of course, to the main topic, which is why is crypto even necessary here to begin with? Can't you just connect your AI to your bank account or use it under the traditional rails? Main differentiation that crypto brings, and there's a lot of aspects that we'll get into, but the main one, in my opinion, is that you have cheap and instant transactions. So as you guys may know, credit card companies charge generally about 3% in credit card fees, which are an inherent tax to restrict the economy that these AI agents could have if they use credit cards, for example. And moreover, a lot of the bank settlement takes place over 2 days, especially if it's international settlement. It can take even longer, which really isn't in line with the internet. So blockchains are internet native financial system, if you will. So you can do sub 1 cent fees on layer twos, on Solana, and have near instant settlement in a global perspective. So that right there is already a huge advantage that architecturally the existing TradFi rails are not equipped to be able to handle. So that's the main and largest improvement that crypto can bring to AI agents. Secondly, this applies to some use case. For others, it might not be as important, but it's transparent. So you can verify all of the data. In often cases, it's immutable. So you can have certain certainty that you will achieve your given outcomes and can verify everything that's going on, which is something that often with AI, you always say AI is a black hole. So being able to transparently verify what actions are being taken is already a good lever to be able to evaluate the success of the AI agents. And not just the success, but also to, of course, build trust of that this is actually something that has potential and not just vaporware. Lastly, and this is on the more experimental front, one unique item that blockchains bring that not like Web2 databases don't have is that blockchains are composable. So having applications within one unique infrastructure layer means that you can permissionlessly connect with other applications. So for example, in DeFi, you can get your liquid staking token and put it into a DeFi protocol and take a loan against that and swap that. You can connect multiple applications all without having to ask permission for anyone. So in DeFi, we're already seeing that composability being used by agents. And even further down the line, we'll have agent-to-agent interactions that will enable another whole set of composability that right now, if you have your unique company with your siloed AI agent, you won't be able to easily interact with other agents. So that's longer term, another unique differentiator that will benefit agents from using crypto. Now let's evaluate the stack. So this is one of the parts that I think there's not enough education on. So I took some research, and I would label it in like these three main levels of the pyramid of the AI crypto stack. So underpinning it are the large language models, which are really the main, generation, the main innovation that has been pushing generative AI and will continue most likely to push agentic AI. So these are a lot of the initial ones, the LLMs that were used by crypto, are just like fine-tuned versions of existing LLMs. So GOAT from the social media agent truth terminal used infamously infinite backrooms, which is like a version of Claude talking to each other with fine-tuned parameters, basically jailbreaking it to interact with one LLM with another. And that instance ended up resulting in the creation of the GoatC token. And there's more recently custom LLMs that use adaptations of these existing big tech LLMs, but for crypto transactions and on-chain data, which make them more fitted for other on-chain interactions. Based on that layer, on top of it, we have the agentic frameworks. So these are launch pads, basically, that allow people to launch their own agents based on the parameters that they define. Some of these are more no-code, like virtuals, which has been the most popular one, and other ones are a bit more like developer-oriented, like AI16Z or Game from Virtuals or Arc, which require a little more coding to build your own agents. So there's trade-offs within these agentic frameworks that each person can evaluate and explore, where some are more build that require more building versus other ones are more ready to go. And lastly, you have the agents themselves, which so far we have seen manifest as mostly social media reply guys. I think that's the most popular one, like Truth Terminal or AIXBT. And more recently, you're seeing some experimentation with like bots with agents that allocate across DeFi to trading strategies, etc. Now let's dive into the largest player of the space, which is virtuals. So as I mentioned, a lot of mind share gravitated towards AI agents in Q4. So this really accelerated, in the virtuals ecosystem, seeing fees go from just 100K, in November, sub 100K in October, to over 1 million per week. So pretty profitable businesses at that point. These fees for virtuals came from agents being launched and also from transaction fees that the agents traded. This is now down to by 90% to back to 100K or so a week, largely due to the decline in new agent launches. Volumes have actually retained pretty decently. So virtuals continue to gain fees from their AI agent token, so TKN as an example, versus virtual token pairings. AIXBT has been one of the main agents there that you guys might have seen around Twitter commenting on tickers and giving basically financial advice, even though not according to them. So from a volume perspective, virtuals is still quite strong. It's just that the launch for new agents has plummeted, likely because the speculation has died down quite a bit, and there's a bit of an unclear path for them finding product market fit. And lastly, the virtuals did implement a buyback mechanism whereby a portion of the fees that they generate here will be used to buy the agent tokens themselves. So they hope to create a flywheel here where that leads to more agents being launched in their ecosystem. Though so far it's continued to decrease due to broader market trends, really. And as you guys are probably aware, valuations on these AI tokens have plummeted. So Virtuals is down about 70%, I believe, as of yesterday. Most of the agent tokens are down 90% or more. So it's been very much of a, devastating crash, I guess, for those holding those tokens. But it also resembles previous trends that we have seen in crypto, where you see a large bubble phase where people start looking at this as the new era of applications, even though it's like very incipient phase. And there's potential, like a lot of people have been comparing this to like DeFi summer in 2020, where the DeFi applications and liquidity mining started to be played around. So it's possible that this is just an initial bubble and also at the same time a glimpse into what we'll see in the future. It's still very likely that a lot of these tokens, both of the frameworks and the agents, will go to zero. But as a whole, it's likely, and as we'll get into towards the end of the presentation, that we'll see this evolve into a next phase where the use cases mature more and actually see more utility out of it rather than just outright speculation. So where are we now in the world, in the intersection between DeFi and AI agents? So I found this nice ecosystem map from IOSG Ventures, full credit to them, that sort of define, no pun intended, the categories within the intersection of AI and DeFi, DFI, however you pronounce it. And one of the main categories that have been getting traction is this abstraction of DeFi transactions, basically. So Griffin and Anon have been, I think they reached 500 million plus in market cap before the recent correction. AI Wayfinder, which is from the Parallel TCG team, has been getting a lot of hype, and TVL, even though they haven't even launched the product. Elsa is a very interesting project as well that abstracts transactions on chain, similar to Griffin. The whole point, I guess, of this category is the whole premise, rather, is that the normal people, normies as we call them in crypto, won't have the time or don't want to learn how to use a wallet. Naturally, it's a friction point, so they will want like a chat interface that they can just interact with and execute things on their behalf. So I think we can agree that at least on paper, that premise sounds like it has a lot of potential and can simplify the user experience by an order of magnitude. But it, of course, has its flaws, as we'll get into. Then we have underpinning it, like the infrastructure platforms, so the frameworks that I mentioned, AI16Z, virtuals, and many more. These allow the creation of agents, and the agent that you want to create is, so far has been very focused on social media. But overall, I think we're close to seeing other use cases that have more impact across on-chain transactions and being more interactive with DeFi. Then we see this subset of agents called market analysis or prediction, like AI XBT, where you can see comments on the market on an ongoing basis. And finally, we have the yield optimization layer, which is where we're seeing a lot of projects either pivot or gravitate towards, which are essentially allowing a layer of intelligence route your capital. So whether that is seeking the best yield farms or trading the best strategies, copy trading, that use case has been getting a lot of traction. So that brings us to the abstraction layer. So what we mentioned, like Elsa, Griffin, the whole idea here is that AI is eating UI, as Naval says it. Here's an example down here of Elsa, where you ask it, how should I invest $100, literally, and it gives you a potential allocation of how to deploy that. So, so it decided to, I tested this out a bit, to allocate a bit to Coinbase BTC. So just basically a BTC wrapper, Aerodrome, the DEX token, and a meme coin, Brett, keep a portion in USDC and 10% as a reserve for some reason. And the interesting thing is, not only can you ask it what to do, which you can do that with ChatGPT, but you can actually click here, proceed with allocation, and it connects to your wallet and, loads up multiple transactions, splitting, basically doing the execution for you, which is a very simple but high potential action. I think, as you guys are probably imagining, it creates a lot of risks to just trust your capital on an AI agent. And moreover, there's some difficulties on, whether you connect your wallet, what access you're giving to these types of applications. So on paper, it facilitates a lot of the use cases, but it also has risks. Taking this one step further, we see the investment layer. So we see, you can do potentially passive investing. So over the longer term horizon, you can imagine, okay, I get my paycheck, you send this to an agent, and the agent does passive investing based on like the criteria that you predefine. That, it's a use case that's being played around with. Another one is doing copy trading. So you keep track of the top addresses, like even the applications themselves can tell you, okay, these are the top traders. Just whenever money comes into my wallet, copy what they do. Or deploy to these new yield farms. So, okay, Bear Chain just launched, automatically bridge capital to this new farm that's doing 20% on Bear Chain. Like the ability to move your capital for you in line with your financial goals, which in many cases can be, maximizing returns within a given level of risk that you can set your parameters for. Lastly, of course, with the meme coin mania, you can imagine you can snipe quickly meme coins, and all of these, I would argue, like, to play devil's advocate, I've been showing these under a positive tone, but in a way they are sort of glorified trading bots with a UI that you can chat on top. So that's the current moment where we are with this. I think, and that's the reality. A lot of these investment DFAI protocols are essentially trading bots with a layer on top attached to an LLM. But you can see how over time that they can be a lot more and enable a lot more use cases. Lastly, of course, we would be remiss without mentioning this comes with a lot of risks. And of course, none of what we're saying is financial advice. The main risks here are your custody. So on one extreme, you can have Telegram bots, which have been around for a while, but now they're rebranding to be DFAI, literally holding your keys and accessing your capital. That is probably the most risky setup possible. And I wouldn't recommend anyone using it with a significant amount of capital. Sort of in a middle ground, we see this email linked wallets enabled usually by Privy, which is a company that creates all of this architecture. So it does facilitate for like new people to access AI agents and like all of their use cases, but having your email linked to a wallet is also potential security exploit, if your email gets hacked. So it's not the best security approach. And what we're seeing more recently, this is a trend that I'm bullish on, is new custom wallets that are equipped just like specifically for AI agents, where you can get a non-custodial setup and still have access to a lot of these agentic frameworks. Another risk, of course, to keep in mind, and you guys have probably heard this with regards to ChatGPT, is that often LLMs can lead to hallucinations. So with regards to like with like ChatGPT, that can happen with like, okay, what happened yesterday with Trump? and a lot of times they can say something that is not true. Same can potentially happen with the FAI and have a lot worse implications. So if you tell a AI agent to execute a trade for you, there is a non-zero probability that it will execute something different than what you told it. So it's important to verify and take that into account when using these agents. Lastly, in a more advanced method, it's likely that this will result, especially if the agents can get significant traction, that there will be potential MEV, either front running the agents or even on a worst case, straight up exploits where they forecast what a strategy will be for an agent and make that like, for example, buy a meme coin that has zero backing. You convince an AI agent to buy it somehow, and then you just literally dump it on the agent and the people putting their capital on the agent. So I think there will be a lot of exploits like this, probably starting on a small scale, but it's worth considering as these likely will continue to grow. Lastly, let's dive into the path ahead. The reality is the AI and crypto intersection is still very incipient. We need the use cases to mature. So, for example, AI XBT, which has been giving commentary on the market, is probably not a good enough use case by itself. So we're seeing, not just the creation of content, but rather move towards like actionable strategies based on the content. So one thing I think AIXBT is playing around is like monetizing quicker access to their tweets and things along those lines. I don't know if like that project in particular will nail it, but I think overall that's a good strategy to monetize content production, which can be and will be increasingly done by bots. Another one that we have been playing around with internally is using AI for anomaly and fraud detection. So of course, a lot of the on-chain data is transparent. So you can use very simplistic AI algorithms to identify when a potential exploit is happening, where a fraud is intending to happen, just by looking at like a trend of data and using z-scores to detect anomalies. We'll actually launch a new feature along those lines in the next few weeks. And overall, a lot of the more investment layer use cases need to be battle tested. I wouldn't be putting my money on these trading bots, but naturally, I think that people will still do it regardless. And over time, we can see this being like the bull case is that the next layer, the next robo advisors, kind of like Acorn and other companies that have currently managed billions of dollars, you can envision these AI agents replacing them eventually. But we're very far, frankly, from that point still. Lastly, we expect to see infrastructure improvements for this to mature. So as I mentioned, security is a very big risk right now. So we need better non-custodial setups, and that's being worked on. We need better cross-chain interoperability, not just for agents, but really for all of crypto. And we need more utility. So not just trading. I think people, especially in one of the market downturns, get a bit tired of just trading bots. So we need more use cases. And now, since these frameworks are free to access and permissionless, the good thing is we're likely to see more experimentation and use cases come out of that. Lastly, I think there's some projects working on custom environments, like custom L1s focused on agents or L2s. There might be something there, but I think as long as there's interoperability with other chains, that would have potential. If not, this is likely, to gravitate more towards Solana and Base, where a lot of the activity is already happening. To conclude, I would say in 2021 or 2022, crypto AI was 99.9% vaporware. We have improved a bit, but it's still at least 90% vaporware. Some of the projects have actual builders that have a solid vision and work ethic. building these. So that's a positive sign. That unsurprisingly led to the first glimpses of product market fit with a lot of these social media agents. This coincided with a time where a lot of attention was gravitating towards AI agents. So we see the first bubble, which tends to happen in a lot of crypto metas. And the good thing is that that has attracted more builders, seeing more builders, not just within crypto pivot towards that, but actually bring in new talent from AI, building like current AI models, say, oh, you know what, I can actually benefit from using crypto for this function, for giving cheap and instant transactions, or for the composability aspects of it. So over time, I think we're right now like a building phase where a lot of these new companies are being built, and that will in turn lead to improving fundamentals over the next few months or years. There are still some questions, not just on the risk side, but also on the defensibility side. A lot of these projects, it's very quick. It's very simple to switch from, okay, I'm using virtuals. Oh no, now I want to use AI 16C. So it's unclear what the modes will be for these projects versus for something like DeFi, where Aave, surpassed Compound as being the most liquid lending protocol. And since then, it's been very hard for anyone to compete seriously. So it's a bit less predictable to see who the winners will be. And overall, I'll conclude by saying that it's a space with a lot of long-term potential, but it's still very, very, very early. So it has a lot of short-term risks. Make sure to exercise caution and do a lot of research before using or investing in any of these AI agents. So now that we got over that, I think you guys can sign up for the next webinar. We'll be talking about Ethereum's future, something that has been questioned quite a bit recently with the ETH underperformance. So we'll be talking about the Pectra upgrade that's coming, but moreover, like general ETH analysis. So if you guys are into Ethereum or even just in crypto in general, make sure to sign up for this one. Our team just posted the link on the chat, and I'll be sticking around a few minutes for questions now. I'm losing my voice a little, sorry guys. So a quick question here. Are there any legal precedents regarding liability that AI agent creators might face if the bots execute an improper transaction? That's a great question. And I think I touched on this here. So yeah, it's a great question. Right now, there is no clear legal precedent for specific crypto agents. So essentially, there's a lot of lawsuits going on in the media side of things, of like AI agents improperly saying facts about someone, calling that like defamatory claims. So there are some lawsuits from the content side of things on like defamation and like improper IP usage. But as you can imagine, with financial AI, it really is so early that we haven't seen like what are the clear path for regulations here. But it's a huge risk. Like, if you're trusting an AI agent to trade for you and it does something else than what you tell it, naturally, it can lead to lawsuits. And since there are protocols here, it's unclear whether they'll just sue the teams or if they'll put a decentralization wall, claiming that they don't control it themselves. So that makes it even higher risk, since it's not just risk of bad execution, but if it does execute incorrectly, you're not sure you can get like legal recourse for that. And as a follow-up question to that, Karthik is asking, should we view the bot creators as simply releasing the code and the users have no recourse if they hurt economically? Basically, I would start with that assumption that yes, users might not have any recourse if the AI agent executes incorrectly, which is why I emphasize this risk. So take that with a grain of salt when you guys are looking to use the newest agents. Um, Julia's asking, how do you invest in AI agents today? So, Julia, yeah, really, I think, as I mentioned, none of this is financial advice, so I won't have a clear answer. But the reality is a lot of the agents themselves are super early and they've collapsed quite a bit. So if we dive into like the virtuals ecosystem, I think a lot of the agents, this is my personal opinion, like the agents that are out there right now, 99% will go to zero. The frameworks that are out there, probably 90% will go to zero. So an order of magnitude better, like the infrastructure, you have higher odds, of course, that to bet on the leading infrastructures. So a lot of creativity will be from like the top teams building agents on these frameworks. These are essentially platforms. You can think of them almost like app stores enabling new apps to be launched. So that is how many people are approaching it, and probably the reason why virtuals reached almost 5 billion in market cap and AI 16C, I think about around 2 billion before the recent correction. Then another question, is there any way to properly research DFAI projects before investing? How do you approach which ones are worth your time? So there's plenty of DeFi products and protocols. Um, a lot of these have tokens, which make it a lot more noisy. In my opinion, launching a token early on is probably just noise and like higher odds of it being a grift. So not necessarily all the projects here are a grift, but I would look towards the ones with the best backers, really. That's like a good sign. If you see, a Polychain or Paradigm backing one of these teams, that tends to be a good signal that it's not scammers operating it. Not doesn't have to be the case, but usually. And so over time, the best teams will come to light, but it's very unclear early on. So it's worth, keeping an eye on the best teams and those backed by the best investors. Where can I test these AI agents? One example you can share. Yeah, I've been testing Elsa and I know the team there. So the example I shared here on like how do I invest $100? You can test this on, I think it's Hey Elsa, is their Twitter handle. But there's many more. Refane is another one, but for that one you need to buy tokens to use, so it's a bit more of a barrier to entry to test that. But yeah, I mean, I would encourage, of course, to take your precautions when testing this and not put in significant capital here. Is there any open source possibility like audit to check if AI agent algo is correct or can be malicious line of code? Yes, there is. And there are a lot of progress with that on like anomaly and fraud detection, as I mentioned. That being said, a lot of the current level of anomaly detection is being used for like the existing DeFi apps. So it needs to be recreated for like these agents actions. If like you can read Solidity or the smart contract languages, you can, or at least like a block explorer with some knowledge, you can see what the transaction is going to do. So for example, with Elsa, you could clearly see, okay, you'll swap this token for this token and evaluate that before accepting a transaction. When that becomes really a risk is if you have like predetermined confirmations for the agent. So I think that'll lead to a whole new, space of the AI, of the anomaly detection and like risk management companies being adapted just for the agents. Okay, I'm seeing some thank yous. Appreciate you guys. Thanks for tuning in. I think I have time for one more question. Sorry, I won't be able to get to all of these. Um, Let me see. I'll do two questions. One because it's triggering me, and then another one more long term. Matos is asking, what's your opinion on Anon and the team behind it? Honestly, this is one we would exercise particularly some caution against. The founder, Daniele Sesta, has previous relationships with the Quadriga COO, I believe it was, who scammed outright a lot of their users. And MIM stablecoin, even though it wasn't a fraud, doesn't have the best track record. So that one is a project that I would particularly exercise caution against using it. And lastly, I think I had one question here in regulation. Which national agencies are most likely to regulate and pass agent regulation on AI? So really, this is a very odd mix because some of these agents have tokens, so you could argue that that kind of falls under the SEC and CFTC. The reality is those agencies won't look at this until they're like over 10 billion in assets. And I think we at a max reach like 9 billion in aggregate and have corrected like 80%. So I think we're still far off, especially under the current administration, that will see regulation against these AI agents. We're more likely to see regulation of AI agents on the like communication domain, so like ChatGPT on like the information domain. But I think financial AI intersection is probably at least 3 or 4 years away before we really have to worry about regulation. And ultimately, we need to ensure we have a solid base for this to grow before it gets to that level. Anyways, thanks everyone for tuning in. Great to see high attendance. It's been awesome having you guys around. Make sure to tune in on the next one, and we'll see you soon. Hope you have a good day. Thanks, everyone.